An exceptional event in the midst of a bear market, the mempools, also known as memory pools, thus the list of pending transactions on Bitcoin, are exploding, and the network fees are at an all-time high. We haven't seen such figures since the summer of 2021 during the last bull market. Over the past few days, executing a basic transaction on the Bitcoin network could cost up to $20. Users are stressed out, miners are jubilant. The reason for this congestion is an exceptional enthusiasm around BRC-20 tokens that operate on Bitcoin, thanks to the Ordinals protocol. How does this new protocol work? What can you really do with it? Does it really pose a risk to Bitcoin? We'll tell you everything in this video. So let's get started. To put it simply, BRC-20 tokens are cryptocurrencies that can be issued on the Bitcoin blockchain using the inscriptions of the Ordinals protocol. This allows you to store all kinds of files and transactions and to associate satoshis with these data while respecting the Ordinals theory. Once again, I'd like to use this image that speaks to everyone with Ordinals. Bitcoin essentially becomes a huge decentralized Dropbox. The first wave of adoption of Ordinals in early 2023 was largely oriented towards NFTs or digital artifacts. If we observe the use of Ordinals by file type since the launch of the protocol, up until February 15, 2023, almost 90% of the inscriptions were images. But at the beginning of March, everything changes. A developer known under the pseudonym Domo announces on Twitter that he's experimenting with a new form of fungible inscriptions on the Ordinals protocol. In a burst of humor and provocation, Domo names his invention BRC-20, in reference to the ERC-20 standard for Ethereum Contract for Commons, which allows for the creation and use of non-native tokens on the Ethereum network. So, as you've probably understood, the BRC-20 standard allows for the deployment, minting, and transfer of non-native tokens on Bitcoin, thanks to the Ordinals protocol. This experiment quickly attracted many curious individuals, so much so that its developer, Domo, had to calm the crowd on Twitter by reminding them that the tokens created had no value at the moment. But it was too late. The speculative machine for the BRC-20s was already in motion. After a brief lull at the end of March, we've seen a strong increase in the use of BRC-20 tokens in recent days. That's what you're seeing in turquoise blue on this graph. This explosion coincides with the creation of new tools specifically optimized for BRC-20, which have allowed anyone to easily create and trade tokens. Take a look at this video. In 27 seconds, anyone can launch their BRC-20 token. At its usage peak on May 1st, 2023, nearly 370,000 text inscriptions related to BRC-20 were observed on the Ordinals protocol in a single day. That's huge. As a result, the use of Ordinals for NFTs quickly took a backseat as to date, over 80% of all existing inscriptions are text files, and the vast majority of them are related to BRC-20. Faced with this exceptional enthusiasm, what was bound to happen, happened. Some BRC tokens began to be bought and sold on the market in exchange for real Bitcoins. What was supposed to be a simple experiment with valueless tokens was caught up in the euphoria of the crypto market. Before delving deeper into this BRC-20 ecosystem, let's see how it works. As just explained, BRC-20s are established on the Ordinals protocol, which itself allows for the creation of inscriptions on Bitcoin. These entries are found in the transaction ledger. BRC-20s don't really have a tangible existence on Bitcoin. They're off-chain. This means that the tokens themselves do not transit on the Bitcoin network, and that BRC-20 transactions are not verified per se by Bitcoin nodes. What is put on Bitcoin are the functions that allow their control. All these functions present in Ordinals inscriptions are then aggregated to get a state of the BRC token exchanges. In other words, your BRC wallet will go look at the Bitcoin blockchain, find these small files hidden in the Bitcoin blocks, and understand who owns which token. The functions are simply encoded in a specific text format, JSON for those interested. Then they're broadcast as Ordinals inscriptions on Bitcoin. On a technical level, BRC-20s simply use three functions: deploy, mint, and transfer. Deploy, as its name suggests, allows you to deploy a new token. We'll use it to create a new token and define its conditions. In this text file, we're going to inscribe its ticker, which is a 4-letter identifier that allows it to be differentiated from other BRC tokens. Essentially, it's the name of the token on the blockchain. Its maximum supply, which is the number of tokens that can be issued, and the distribution limit, which allows to set a limit for each token minting. For example, here's a JSON file that could be recorded on Bitcoin thanks to Ordinals, and we can recognize the P, which identifies the BRC-20 function, the OP, which identifies the operation of deploying the BRC-20, the token's ticker, which is here, ORDI, the maximum supply, which is here 21 million units, and the limit for each distribution, 1,000 tokens. The second BRC-20 function is called Mint. It allows users to issue new BRC-20 tokens. Essentially, once the token policy has been established using the deploy function, the Mint function allows you to actually retrieve the tokens to an address. For example, this text file here allows to mint 1,000 ORDI. That is, I'm about to retrieve 1,000 ORDI tokens to my BRC-20 wallet. This function can be used by any user until the maximum supply of the tokens is reached. The third function is transfer. As its name suggests, it allows for the transfer of BRC-20 token between two wallets. For example, let's say we want to create and use the BRC-20 token GACC. After funding our BRC-20 wallet with Bitcoins, the first step in our project is to deploy the token along with its terms of use. To do this, we inscribe the deploy function with the token's name, its maximum supply, and its conditions. Concretely, this represents a simple Bitcoin transaction, where we send Satoshis to our own wallet with the famous text file with the function as the transaction ledger. Once the GACC tokens are deployed, any user is able to retrieve some with the Mint function. Again, this represents a simple Bitcoin transaction to our own wallet. Everything happens in the transaction ledger. Then, each user in possession of the GACC token can transfer it using the transfer function. To do this, we inscribe this function in the transaction ledger with our address holding a GACC balance as the input and the compatible address of our recipient as the output. Indexers then do their off-chain work. They observe all inscriptions present on Bitcoin and they aggregate them to determine a state. Basically, they say address X owns 200 GACC and address Y owns 400 GACC. But from Bitcoin's point of view, these are just classic transactions with a few extra lines of text. There you go. You now know all the ins and outs of the BRC-20 protocol. In terms of consequences for Bitcoin, the BRC-20s are actually quite clean. We'll talk more about the exploding transaction fees on the network later on, but apart from that, there isn't really a long-term risk to Bitcoin with this standard. Since the BRC-20s use the Ordinals protocol, they rely on a sort of envelope in the Bitcoin transaction ledger. This envelope is simply ignored by the network's nodes, so there's no additional computation cost for each node. And in terms of blockchain storage needs, BRC-20s are much lighter than NFT-type image entries since they're only small text files. The only slight risk that remains is the creation of many very small pieces of Bitcoin, which we can call UTXO. Now that we've covered the theory, you're probably eager to tinker with this new toy. To use BRC-20s, you'll need a compatible wallet. The most popular one to date is Unisat, a wallet in the form of a browser extension. With this type of wallet, you'll be able to interact with BRC-20s and check your balance for each token. Unisat has also developed a platform to connect sellers and buyers of BRC-20s. Remember that BRC-20 is a node to Ethereum's ERC-20. And well, the name Unisat was chosen in reference to Uniswap. Once again, the codes of Ethereum's DeFi are being used. You can find a list of various tools, marketplaces, and BRC-20 indexers on Domo's website. One thing's for sure, this BRC-20 ecosystem is currently booming. At the time of making this video, the total market cap of BRC-20 tokens is around $180 million. Topping the list is, of course, the token created by Domo, the inventor of the BRC-20 standard himself. This token has a ticker ORDI. It represents more than 60% of the total BRC market cap. Among the other tokens at the top of the rankings, we find PEPE and MEME, the PIZA, and the SHIB. Let's be clear for now, these tokens are absolutely useless. They don't really have any purpose or functionality, apart from the ability to be transferred. However, we've also noticed a real enthusiasm for cybersquatting with BRC-20, which involves buying suggestive domain names with the intent of reselling them to big brands and businesses in the future. In the crypto ecosystem, this practice is well known. It was notably marked by the sale of the crypto.com domain to the famous exchange of the same name for several $1 million. For a bit of trivia, Michael Saylor made a lot of money during the internet bubble by buying .com domains for a multitude of keywords for a few dollars, which he then resold at a premium to companies that needed them for their businesses. Many users are trying to pull off the same stunt this time with BRC-20 by cybersquatting token names that could potentially interest large entities in the future. For example, some have developed and minted the AAPL token in reference to Apple's stock ticker. Pretty clever, huh? From the perspectives of the Bitcoin network, the use of Ordinals with BRC-20 is very different from the previous use with NFTs. In February, some Bitcoiners started seeing the registration transactions as last resort buyers for space in the blocks. I'm explaining this point because it's very important. As the temporal aspect wasn't necessarily the most important for minting an NFT, most users preferred to set very low fee rates for their image registrations. During February 2023, we could observe several congestion in meme pools. There were hundreds of thousands of transactions waiting for confirmation. Despite this heavy use of Bitcoin, the transaction fees remained quite reasonable. In fact, the vast majority of pending transactions were image registrations, and on average, nearly 70% of the transactions in queue fell into this low transaction fee bracket. The Ordinals were included in the block only when the demand dropped. Everyone was happy with this system. Traditional payment transactions could be executed quickly without paying too high fees, and the registration transactions allowed miners to be rewarded even during the quietest periods. This is why some have said that Ordinals registrations would be the last resort buyers in the long term. But this was without counting on the inventions of the BRC-20 standard. While NFTs didn't really have an incentive to be included quickly in the blocks, BRC-20 users necessarily have an interest in seeing their transactions confirmed quickly. Adding to this phenomenon is the fact that many BRC-20 users don't fully understand the workings of the Bitcoin fee market and choose to use the default fees on BRC-20 wallets, much like they would on MetaMask. I've noticed that these default fees are quite overestimated by BRC-20 wallets. This is likely one of the causes of the fee surge. As you've understood, on a purely technical level, BRC-20s are nothing groundbreaking. It's simply a derivative use of the Ordinals protocol. But someone still had to think of it. It's important to understand that BRC-20 tokens are anchored in a rather trivial way. They can only be transferred using on-chain Bitcoin transactions. In other words, the BRC-20 standard is hard to replicate on the Lightning Network. Each small transaction, from the token deployment to its transfer, including its issuance, requires an on-chain transaction each time. It will therefore be difficult to scale with this type of token. As its inventor Domo says, the BRC-20 standard is for now just a bit of fun experimentation. It's not intended to establish tokens on Bitcoin in a lasting way, especially since other much more complex and suitable protocols are being deployed on Bitcoin, like RGB or even Taro, the protocol launched by Lightning Labs in 2022. Compared to RGB tokens, BRC-20s have very poor characteristics. For example, BRC-20s are not private at all. All the data is publicly available, and anyone can recognize a Bitcoin transaction linked to the BRC-20 protocol. In other words, BRC-20s work, but they're far from using the full potential of the Bitcoin blockchain. As we said at the beginning of the video, BRC-20s are content to use Bitcoin as a simple decentralized Dropbox, and nothing more. In terms of investment, is it a good idea to buy BRC-20 tokens? Well, that's hard to say. Some tokens have gained a lot of value in recent days, like ORDI, SHIB, or PEPE tokens. This is obviously due to the FOMO and extensive media coverage around BRC-20s. Will this trend continue in the coming days? It's impossible to know. These tokens don't really have a value proposition. At the moment, there's no technology or company behind these assets. What is certain is that investments in BRC-20 tokens currently involve an extremely high risk. As we often remind you, the most important thing is to ask what a protocol and a token fundamentally serve before buying it. Value comes from utility. If there's no utility, there's no value. And let's be clear, for now the entire BRC-20 protocol is very shaky. As proof, at the time of this video, a major bug has just been discovered by the Ordinals theory, endangering the very foundations of the BRC-20. A user had the idea to create a registration with a non-standard Bitcoin transaction. This special transaction literally has 0 Bitcoin as input and 0 Bitcoin as output. In practical terms, this means that a registration has been attached to 0 Satoshis, and therefore the Ordinals theory is currently offset by 1 rank. It's a small glitch with huge repercussions on the overall mechanism. With this type of bug, the risk for your BRC-20s is simply that they suddenly disappear from your wallet and change ownership without your consent. It's therefore important to understand that these tokens neither benefit from Bitcoin's consensus mechanism nor from its security. They rely on the Ordinals theory, which is ultimately just an arbitrary convention. In other words, the rules of the BRC-20s are imposed exclusively off-chain. Bitcoin only guarantees the availability of information. Ultimately, as the inventor of the BRC-20s told us, all of this remains experimental tinkering for the moment. We've already seen attempts to reproduce or improve the BRC-20 standard. For example, an ORC-20 standard was created very recently. It would do the same as BRC-20s, but with a bit more options and flexibility at the token level. Whether in the same way that digital artifacts were surpassed by BRC-20s on Ordinals, the Stamps protocol now also has its own token standard, the SRC-20s. In short, if you have ethers, you can sleep soundly. The BRC-20s are still far from being able to dethrone the ERC-20s and all the DeFi that has already been built on Ethereum. As we've seen, this technology is still very shaky and experimental. Despite this, a crowd of investors hungry for thrills during this bear market have turned to trading these tokens. This has created a major congestion on the Bitcoin network. Transaction fees have greatly increased since BRC-20 users have an economic incentive to outbid. We'll see if this protocol endures in the long term. Technically speaking, BRC-20s use only a tiny fraction of the power of Satoshi's invention. Perhaps in the future, other protocols that manage tokens on Bitcoin will be much more efficient. I'm obviously thinking of the RGB protocol or the Taro protocol. We are indeed preparing 2 videos on these topics. Don't miss out, so subscribe. In any case, I tend to agree with Julian Guiton and Nicholas Birdie. If the Ordinals or Stamps protocols can take down Bitcoin with NFTs, it means that the technology was really not as solid as we all thought. And let's not forget, transaction fees on Bitcoin are bound to increase. Wait till you see the transaction cost when Bitcoin hits $500,000. $10 will seem like a joke. So yeah, let's stay vigilant. Let's see how this situation unfolds, but personally, I'm not too worried. What doesn't kill Bitcoin makes it stronger.
Calm down, and just have a look at the reality.